Hey guys, welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing, and in this video, we're going to be talking about financial stocks, as a lot of them are well off their 52-week highs. So starting off with PayPal stock, this one had a 52-week high of 310, and ever since those all-time highs were down about 35 to 40%. PayPal being a disruptive financial technology company, operating an online payment system in the majority of countries that support online money transfers. A disruptive growth company, similarly with Square stock, same kind of idea. A disruptive growth company which had a 52-week high of 289, and ever since those all-time highs, down about 20%. Visa stock, which needs no introduction, had a 52-week high of 252, and since then we're down about 18, let's say 20%. MasterCard stock, also no need for an introduction, had a 52-week high of 401, and ever since those all-time highs were down, let's say about 15%. So whereas PayPal and Square are both growth companies, I would say that Visa and MasterCard are also growth companies, but similar to Apple and to Microsoft, they're a lot more stable. And it's unlikely that we're going to see the type of volatility that we see in either PayPal or Square stock. Berkshire stock, which is not that well off its all-time highs. It is a value stock that had a 52-week high of 295, and from those 52-week highs, we're down about 3 to 5%. And lastly, Jpmorgan Chase stock. This one had a 52-week high of 173, and ever since those all-time highs were down, let's say about 5% as well. Jpmorgan Chase being a traditional bank, more regarded as a value dividend stock, but it is definitely my favorite bank stock in the entire stock market. JPM and Berkshire, not too crazy off their all-time highs. MasterCard and Visa, a little bit more. Square, kind of the same idea, whereas PayPal has just fallen off a cliff, especially over the last 2 weeks or so. So starting off first with PayPal on the candlestick, so you see a bunch of my lines over here, and right now the price isn't even close to that. The reason for that is that PayPal has had such a vicious sell-off. So I started buying the stock around 250, thinking that, okay, it's pretty well off its all-time highs. This is a growth blue chip company that's going to do excellent work over the next decade or two. And it had really strong support around this 235, 230, 225 level. And just sliced through every level of support to where we are now. We had pretty high volume even after this gap down. And considering this is one solid red candle on this volume, doesn't make me all that confident, especially over the short term. It looked like it was recovering. It had this nice candle over here where it had buying pressure, high volume. We started recovering all the way to the about 215 level, and then again just falling off a cliff, creating even newer lows. So when we zoom out, we've got to look at the next levels of support and if they're going to slice right through them, or if the buyers are eventually going to be stepping up. So the first level I'm going to draw at exactly where we are right now, around the 193, 190 level. The next one being around this let's say 85 level. And the last one being around 170, 172. The reason why is if we look left at about a year ago, we had some pretty solid buying in September, as well as November before the big run. Not to mention a little bit of coiling action at the end of July of 2020. Then again, we have these solid levels over here, and they just broke right through them. We are pretty oversold relative to previous levels. Even when we look at March of 2020, when the crash happened, this dip over here from 123 all the way down to 81. And when we put that into the calculator, so 81 divided by 123 minus 1 is about, let's say, a 35% drop. This drop we're experiencing right now from 312 all the way down to about 194. So when we enter that into the calculator, so 194 divided by, we said 309 minus 1 is about a 37% drop. So really ugly sell-off with the majority of it coming in about 1 month. So we went from 271 all the way down to this level of 195 in about 1 calendar month, with that rumor of acquiring Pinterest triggering the sell-off. And then this gap from earnings. So I got into the stock too early. Do I regret it? I mean, obviously I don't want to lose money, but when I go back and think about what my thought process was, it wasn't the worst. Perhaps I could have scaled in better. But at the same time, who could have guessed that this was going to happen? Right now, it does look a bit like a falling knife. However, with the RSI so low, how much lower can the stock go? I mean, anyone's guess. Not to mention this gap all the way to 225. So we could see some kind of recovery back to these levels over here, which are going to be really important. Because if we break through this 225 level, perhaps we could be recovering. But if we just find selling pressure and come back down, it's not going to be a good time. But it is what it is. Taking a look at Square stock, this one looks like it's been pretty range bound. So we've had highs of about 284 and lows of this range of about 190 roughly. And we can draw a few other key support lines. at 225, 250, and then 285. So simply put, if we see more weakness and we break this channel, the next level we're looking at is maybe 210 or 200. If you break 200, that could be a pretty major psychological zone, at which point you're looking at probably 180, 175. Until then, we're just going to be trading sideways into our channel until we breach this top of the channel over here. All right, next up being Visa stock. We could draw a pretty nice line at this 200 level. And what we're finding with a lot of these stocks are these big round numbers, 200, 250, 300. There's a lot of psychology that goes behind our brains and our emotions. Think about the stock split last year with Apple or Nvidia. When Tesla went from 2,500 to 500 in September of 2020, all of a sudden the stock looks a lot cheaper even though it's the exact same thing, and then people start buying into it. Not realizing that the market cap is exactly the same, it's just the share price looks cheaper. This one isn't trading as neatly as Square stock, however it's not nearly as sick as PayPal. And for me, I'm just looking to accumulate shares at solid psychological buying points. 200, 185, and then we want to see some kind of turnaround. And what we want to see from Visa stock is some kind of recovery and eventually breaking this resistance point so that we can contest 235, and then after that it'll be the all-time high. Similarly, we have MasterCard stock, very similar stock, similar moat, blue chip, can't go wrong. Again, we want to see some kind of recovery, breaking this 370. And I think once we break this 370, then we can start testing those all-time highs again. Warren Buffett's Berkshire. This one trades pretty neatly. It is a value stock after all. So we can draw our lines. So we have this channel over here, and we could probably draw one more around this 280 level, which is where we are right now. So I'm thinking the closer we get to 270, the more of a buying opportunity it looks like. If it were to break this 270, then the next level would be, let's say, 263, 260. But remember, this is Warren Buffett's company. It is a value stock. It's not known to have crazy crashes. Just in March of 2020, but which stock wasn't safe during that time? And I'm quickly going to remove the 20 EMA, and I'm going to show you the 200 simple moving day average. And what we can notice is that 200 simple moving day average is really approaching the stock price. So it'll be interesting to see if big money and Wall Street use it as some kind of support level. And lastly, we have Jpmorgan Chase, and we can also notice that the 200 simple moving day average is also approaching the price action. And we see the last time in September when the price was close to the moving average, it didn't touch it, but it found buying pressure, and we could perhaps be seeing a similar situation with similar looking candles. Both this one and the one from Friday both gap down and have a decent wick underneath showing buying pressure. Not to mention the RSI is as low as it's been since nearly June. And when we zoom out, when the RSI is usually that low, it ends up being a pretty good buying opportunity. So let me know in the comments below, are you looking to buy any of these financial stocks? Are you going to trade them, invest in them? Which ones? PayPal, Square, Visa, MasterCard, Berkshire, or JPM? Let me know. If you're new to the channel, welcome aboard and hit that subscribe button. As always, smash that like button, and I will see you in tomorrow's video.